We're live.
Let's see.
We're live. Hello, everyone. Welcome to another episode of Red Line. Hello, Chris. Happy
Hey, how are you
Wednesday.
doing?
We're doing good. How are you? I'm hyper.
Good,
So let me go
good.
on
You
mute.
were saying earlier how it feels like a Monday, right? We had Friday, that was like a half day, right, for most people. Then we had Monday that we were like, okay, well, does it make sense to really work on Monday if we're going to be off on Tuesday, right? And then here we are today.
Yeah, here we are today. I hope you guys had a great 4th of July. Thank you for coming to another episode of Red Line. We do have a great show for you guys. I'm Abby Joseph, your tax strategist,
I'm Christopher Bush, your financial advisor.
and welcome to Red Line. Hit us, Victor.
That's 100. That's 100.
Hello, everyone. Welcome back. Are you excited about the show tonight?
I am just kind of getting everything together. So, look, I guess the month of June we kind of spent with going over business funding, business credit, business funding, business plans. What else we talk about?
Business structure. We went over
Our
business
structure.
structure. Yeah, we went over business credit last week. We
Yep.
had a great episode last week with business credit. So tonight, guys, and for the next couple of nights, we're going to kind of dig on business funding and also contracting, right? So tonight we want to talk about how your financials should look like, right? We're going to go over what are the banks looking for and how you yourself should prepare as either an entrepreneur, a contractor, a small business owner, or if you're just an individual that is now starting your business and you are needing funds, and how to actually be prepared for that. Now, when you started your business, Chris, did you actually have to get help, or did you already have money?
Actually, no, I really just bootstrapped it. All right. You know, I guess from real estate perspective, I have done situations where I did some private lending in real estate. Right. Once I learned and understand how real estate worked and able to do deals and wholesaling, able to say, hey, look, we have a property. Right. Well, I didn't want to use my money, but I can take an equity stake in the property, but then give other private investors, an opportunity to buy in and maybe get a promised 10 or 12% interest rate. Right. So, so I learned how to do that early on. But as far as for me, I run a financial services business. And I think, one of the most powerful things to be in the service industry is that most service industries, you don't have a lot of startup costs. Right. The only startup cost that you have is your sweat equity of you learning a skill, right? You learning how to communicate with clients, or people about knowledge that right? And for you doing that, you don't really have to have, okay, $100,000 or hey, I need to get business credit. No, if you learn a skill, having an appointment, know how to market, you don't need money to. Yeah, I guess it's so cliche. People say, oh, you have to have money to make money.
Somewhat.
Yes, no. Right. I mean, so a lot of times you don't. You have to have an idea. There has to be a problem that you can solve that you can then provide value to. But a lot of times that doesn't necessarily need money. You just need a market, and that's what I love about the service industry. So I've never had to, quote unquote, use funding in the beginning of my career. What about you?
I didn't have to go to the bank, but what I did do was I did get a business credit card, and
Yeah.
I did use that business credit card to kind of fund my business when I started. So, and just like you said, if it's easier when you are providing a service than when you are selling a product, right? When you're selling a product, you need to create inventory, right? So
Yeah.
you need to actually at least spend in the front end right? And then make the difference or even more in the back end. But when it is service, as long as you have an audience and as long you have a good, idea, then it's a little bit easier. But one of the things that I do remember going to the bank, and asking for a small business loan. And I do remember being rejected.
Mm-hmm.
I do remember being rejected because one, right, my credit. Remember last week we talked about
Yep.
credit. One, my personal credit wasn't so good. So regardless if I was asking for a business loan or a private loan, because my personal credit wasn't so good, I didn't get approved. Also, two, one of the things that I had to consider is what it is that I can afford. Because what I didn't want to do was take out this loan, and business usually you don't start making money up front, and then but that loan still needed to be paid on a monthly basis. So I didn't get approved for a loan, but I did get approved for a credit card, which was weird. I did get approved for a credit card. I remember my brother-in-law co-signed for my credit card. I was a hot mess. In the beginning, I was a hot mess, y'all. Listen, I know some of you guys can relate. So I wasn't approved for the loan, but I was approved for a credit card, and I used that credit card. So tonight I want us to kind of break down what is it that the banks are looking for, right? What are the steps to getting funded, either for your startups, or if your business is an e-commerce, if it's a product that you are selling, what are the banks are looking for? Like, I get clients that says to me, hey, Abby, like especially my restaurant owners or even real estate, the bank are needing my financial reports. How should my financial reports look like? So in a accounting setting, it's different, but in a financial, it's a little bit different. So when it comes to the financial end, Chris, give us a little bit idea. What is it that the banks are looking for and how funding looks like?
Yeah, I mean, I really think it goes hand in hand with, I guess, the finance from a finance side, accounting side. It's really more, I guess, more so the accounting part, right? What it looks like. I think we talked about in the early episodes of how majority of the time, like if you have a consistent paycheck, right? When you look at a job, they're going to be able to finance more, right? So I think when you're setting up yourself as a business, I think when you really want to start to gain a little bit more capital, of course, there's things that you can do in the interim, but when you want to gain capital and you are paying yourself on payroll, you can show that you're getting a W-2. You can show that your business is actually profitable each and every month, right? That you can have bank statements and you can easily go show them. You can have P&Ls at a click of a button, right? When you can have a balance sheet, a lot of times too, they want to say, okay, they want to see your last year, right? Stubs. Yeah. Or P&Ls, but also they want to see your current one year to date. So a lot of times people say, okay, well, they always wait to the last minute, right, to do their P&Ls or consolidate their books. But it's so important. If you keep that part always active, you will never be in a situation to where you got to think about, okay, how am I going to put these financials together just so I can get approved for the loan? No, this is how my business is operating every single month. And I'm always approvable, right? I guess that even that's a word, right? I'm always that way.
Yeah, and that's a perfect answer. You need to walk in the shoes of a business, right? And when we think of business, and it's so funny because people always think accounting, right? When they think of an accountant, they think of someone that works with numbers all day. But the true definition of accounting is the language of business, right? Yeah. So if we can understand the language of business and we can speak it, then we understand the financial part of the business. So having a up-to-date P&L, like you said, is very important, guys. So what are the banks are looking for? They're looking for a P&L that shows, that has a net income, that's not showing, a loss every year. So if you're making about
that's huge, Abby, right there, because a lot of times at the beginning, everybody's, oh man, I'm gonna claim a loss. I want to get money back. But then you suffocate yourself from actually getting that that lending or that progress that you need. So it's not, understand you want to take a loss, but at the same time, you got to show a profit, right? Because again, it's going to look at yourself as a hobby at some point. But go ahead. I didn't mean to cut you off.
No, you are perfectly fine. It is absolutely correct. So understand that you are in business to make money. So when the bank looks at your financial report and they're looking at you with P&L, and every year you have a loss, then you're not really running a profitable business, right? I say this to my traders, right? In order for you to be trading under an entity, you need to be a profitable trader. You need to show IRS that, this brings bread. This brings bread. This was what brings food to your table. So if you're running a business, they need to see stability, right? Consistency, cash flow. So then when you're looking at your P&L, I would say, listen, statistically, yes, IRS is when IRS look at your business, IRS is saying, you know what, the first 5 years, it's okay if you are at a loss. The banks do not care what IRS is looking at. The banks is looking at, listen, I need to see profit, because it is the profit that's going to actually prove to the bank that you'll be able to pay them their money back. So when we're looking at your P&L, one of the things that the banks do look at too is there a specific item that you are spending a lot of money in? And what is it that you are spending a lot of money in? Are you spending a lot of money in meals? Are you spending a lot of money in travels? Are you spending a lot of money on W-2 or subcontractors? Are you spending a lot of money in inventory? So they are looking at that. So they are looking at, one, are we having a net income, right? Two, our spending habits. What are we spending money in? And having a consistency cash flow. And what does that looks like is pretty much, okay, on a monthly base, how much comes in, how much goes out. On a quarterly base, how much comes in, how much goes out. The reason why the bank in the last minute usually asks for your financial report is because they want to see the most up-to-date income.
Yeah.
So they'll ask you for your last 2 years, but then while you're closing on the loan, they'll be like, can you just ask your accountant to send us the most up-to-date financial report? That's because they want to see last month or current month, right?
Yep.
They want to see that consistency. And then when it comes to your balance sheets, what are they looking at? They're looking at, do you have other loans? They're looking at your liabilities, right? Do you have a high credit card balance? They're looking at owner's contribution or owner's draw. Are you constantly taking money out of this business? One of the habit that I see small business owners do is they will take a loan, right, on the business, which is perfectly fine, but they never pay it back.
Yeah.
The banks are looking at that too. But you also want to make sure that you start by considering what you can afford given your current income. So your expense and other debt obligation. So you don't want to just jump into loan. You also want to look into what is it that you can afford of. Just because the bank says they'll give you $200,000 doesn't necessarily mean you should take $200,000.
What?
Listen, I see people be so quick to take loans and they get happy. Listen, I'm going to rebrand. I'm going to buy this. I'm going to buy that. But then boom, inflation happens. Now that loan don't go away. We still have to make that payment. And when we're looking at your business, cash flow slows down, right? So we're not talking about where to move money at this point. We're talking about budgeting.
Yeah, and I think that by getting in loans, or even using credit, it always has to relate to some type of income producing activity. That money's coming back, right? It can't be for just, hey, look, I'm getting a loan, I'm getting all this money to get things set up. Right now, again, you may need that money to get set up, but at some point you got to say, okay, I know that if I'm paying $1,000, $1,200, $1,500 a month to service the loan, I understand that, hey, look, I got to get some money back from it. And I think that's where we kind of get in trouble, because a lot of times you may not really need credit. You may not need to get loans. You may just need to go hustle, right? You may need to go, right? You may need to go run your business. You may need to go focus on profits on those type things, unless, again, and I'm kind of thinking about it because one of my partners, he actually has a business that he has a tangible product, right? Okay. So if you look up Enjoyable, okay, so it's a product for dogs, because try to get dogs away from eating human food, right? But in the bottom of the dog bowl, you actually put human food in it. So, but on the top of the bowl, you put like the real dog food, so they smell the human food or chicken in that they love, but they really just eat the dog food, right? Oh. So in that situation, right, great invention. He was actually on Steve Harvey or something, So great invention. So even something like that, okay, well, you need to buy inventory. Okay. So you may need to, okay, well, I need loan, I need credit in order to buy inventory, right? So then I can go sell. So at the same time, I would also want to see people have some type of proof of concept to show them they're able to get the product sold or get it moved before they just go buy a whole bunch of inventory. Right. So it's a two-way street. Yes, you need capital to get inventory, but okay, now that you have inventory, can you move it? Because if you can't move the inventory, now you can't service the debt. Right. So all that comes in, in steps. And that's what we have to really look at when we're building a business like that.
Yeah, I agree with you. So, and this is where, when we talked about having a business plan, it's so important because marketing, right? Marketing, projection is important. So if we're projecting that we need to make $300,000 a year, how much of that do we need to make monthly? Okay. Out of expense, out of inventory. So I agree with you 100%. It's one thing to get these loans, but you got to have a game plan. And sometimes we really don't need the loan. And I really don't have a problem with the idea of using other people's money because I don't like to use mine. I'm 100% with using other people's money. But understand, other people's money is not your money. Other people's money needs to be paid back.
Yeah.
If it's your money, at any point, you could tell yourself that, hey, listen, I had a rough quarter. You still okay. But when it's other people's money, they don't care if you have a rough quarter. They're looking at to get paid back.
So I guess I want to ask too, like just in the chat. I mean, anybody that's watching now, kind of let me know what kind of business do any of you guys run a business now? And I kind of would like to hear if there's a situation that makes sense. So you say, okay, Chris, well, I know that I need funding to get this growing. Like, what does that look like? If anybody's in the chat that wants to kind of talk to us a little bit on, I would love to kind of hear from you guys, understand, okay, what type of companies are you running that you know that you need to accumulate, right, some additional funding to get your business moving, right? Because I mean, there's just so many businesses right now that you can run online that you startup costs are small. Fund.
I'm down with the OPM.
All right, other people's money, right? So yeah, I'm interested to kind of hear that, like what kind of involve, and I guess I'm thinking about different industries now, like if you're running a tech business, maybe you need loans or money for app development, right? But I even feel that that's kind of risky, right? Because a lot of time on an app, if you say, hey, look, I need to spend $50,000, $75,000 on an app, that app is still not generating income. So how are you getting that financing? You still got to pay that bill right? So those things are so important when I'm thinking about, again, real estate would be a easy one. Because again, that's something that you can say, hey, look, I know I'm buying this property, 60% under market value or 40% under market value. If I'm getting a loan or financing, I know that, hey, look, I can finish the deal in 6 months, right? Depending upon today's interest rates, I'm going to factor in a buffer. So that's some place that you can use other people's money. But I would, a restaurant, a lot of people need upfront funding. Right.
Restaurants are so restaurants to me are very, very risky. And it's not to say that it is not an industry that blooms, or it's not an industry that makes money. It's such an industry that you spend so much upfront that if location is so important geographically, right? Seasonality is so important. The food itself. So restaurants is a little bit tricky, and usually a lot of people that are running a restaurant or that's opening a restaurant, they actually usually need funding up front. Now I know you do, and for me on the other end, like, where would I need funding, right? I would probably need funding if I'm looking to purchase another firm, right? I may say, you know what, I want to grow, right? I'm ready to enlarge my territory, and I would like to purchase a fund, another firm. So I may go to the bank and say, hey, listen, Bank of America or Chase, I need $150,000 to purchase this fund. Now, I may have that $150,000 sitting in my account, but I don't want to use my own money. So I'm going to use the bank money. Those are another example. Now, because I'm purchasing another fund, another firm, I already know I will have their clientele, so I will have their books. So that gives me an idea of where I'm going to make my money back.
Yeah.
So it's just so important to have a game plan of where you are going to get your money back before jumping into an idea. Like, I'm an idealist. I can literally sit here and go over all kinds of idea with you, but without a game plan, that idea is just still an idea. Regardless if the bank gave you $200,000 and you have $200,000, without a game plan, you just have $200,000 with an idea. Now with real estate, you've done real estate, Christopher. So when you go to the bank, what is it that the bank are usually looking for?
Right. So number one, if you're going to do that for a personal property, if you're doing it for real estate purposes, a lot of times banks want to see a track record of that you actually doing it, right? When it comes to real estate, right? So you want to be able to you're probably going to have to get your own first couple units on your own until a bank starts to trust you. That's why I normally suggest have a good local bank. But again, they're going to want the same stuff. They're going to want a P&L. They're going to want 2 months. You're going to at least 2 to 3 months of previous bank statements. They're going to want to see your business credit profile. They want to go see they're going to see all the normal docs that you need to have happen in order to get funding. But the biggest thing is they want to know about the deal as well, right? Your personal is great, but from a real estate perspective, they want to understand, okay, what's the current market value, right? What's the after repair value? What is how much what's the construction cost going to look like? What's the timing involved? See, the more information that you're able to give a lender about the deal when it comes to real estate, the more lendable you become, right? So if you don't bring them details about the deal, normally I bring a full package to my lender, like to the bank or my lender that's doing a lending. I'm going to build him a full package on what the deal looks like, right? What the expected rents need to be, what's the comps look like. So that way they can bring that to the financing team to make sure I get a better deal or better rates when it comes to my funding, right?
Okay. So usually what you're saying is it's usually because you want to build up some type of portfolio.
Correct.
It's usually best to start off personally.
Yeah.
Okay.
Yeah. So you're gonna build a personal relationship first, right?
Yeah, with the bank.
Exactly. I'm saying it's not going to be, hey, look, I'm going to go to this bank and I'll walk in. Hey, I need $3 million, but I want to get this 20 I want to get this 20 unit apartment complex. It may not happen from day one at every bank, right? You may have to build up to that to build that credibility, so they can see you get a unit paid off, get a unit paid off, and they can see you have a history of getting loans and paying them off, right?
That makes perfect sense. Let me see. Don said, I have an organic soup business with no inventory. Also, another problem is getting clientele. I agree with you. Tell me a little bit about the soup business, organic soup business. How do you have that with no inventory?
You said soup.
Oh, soap business. What?
It does. The writing looks crazy on the screen, but yeah. So okay, organic soap.
So you have an organic soap business with no inventory. How is that possible, Don? So you did not have to purchase anything? Because with inventory,
or maybe he's saying he needs to makes it to order on inventory.
No, he said I have an organic soap business with no inventory. Okay, so then are you saying you selling it so much that you don't have? Okay, so I need a little bit more. We need a little bit more.
Some more stuff, right? Our minds, right?
Yes. Let's see. What about the upfront needs from franchising? Money needed upfront.
So actually, on the franchise side, what I've seen in the past that's doing really well when you're trying to get a franchise, for you to work with a franchise partner or a franchise broker. They do a really good job. There's this guy in New Orleans, I forgot his name, Ted Fireman, that's him, boom, that I used before, Ted Fireman. I don't know if he's still in business now, but he was a really great franchise broker, to where he broke it down, what franchise is available based on your range, what your profit margins need to be. He looked at every single industry, what you're looking at. So sometimes with franchise financing, number one, we talked about last week about using a Rob's plan that you can use 401k financing. But a lot of times that broker will link you up with a company that will do in-house financing for you on a franchise, right? Now, you'll still need some upfront money, right? So that's where you want to have, they're going to want to see some liquid cash outside of a loan. So on franchises, they may say, I remember back in the day where you can actually get a Wingstop franchise, right? That's what, for like $50,000, right? And then you can, had a net worth, I think 150 grand or something back then that you can do that. So there's different ways to get it, but it's really depend upon what franchise that you pick, right? And using a franchise broker to help you understand, okay, how can I get additional funding in that line?
Yeah. I mean, one of the things too, like, I had a colleague of mine who purchased like 5 accounting firm. One of the things that he did was he created a contract to where he partnered with those individual for the first 2 years. So then what it does, it created a relationship with the clients, because he didn't want to come out new to those clients. So he created a relationship to where the person that he's purchasing those firm from is able to introduce him. So the first 2 years, it kept him still as owner, but coming in, it was kind of like a process. And I think with franchise, that could probably also work. Have a relationship with an individual that's already doing that. Like if I could think of, I would want to be a Chick-fil-A franchise, right? Yeah. So I would want to create a relationship with an individual that owns one already.
Yeah.
That would probably help with the process. Any recommendation? Let me pull Leah question in. Any recommendation? Oh, sorry, Leah. Any recommendation on companies that finance government contract? Next week, we actually have our guest speaker coach who's going to be going over government contract. Leah, put it in your calendar to be here next week. He's gonna be able to answer all the government contracts for you. Dawn says my credit is horrible. I can't get inventory, but have to use my own money and funds are tight. I absolutely understand that, Dawn, because I remember when I first started my firm, funds were really tight and clients didn't just, I didn't open my firm and clients were running in. So I would say one of the big things that I had to learn real quick is I can't be shy, not to be shy. So because it was a service that I was providing and I knew people needed that service, I needed to put myself out there. So I would recommend, put your organic soap out there, put yourself out there. So then you could build capital, you could build some cash flow. And from that cash flow, you could build inventory. I always say, when I first started my firm, I would cut my incomes in half. I would put a small portion of my income aside, right, to work on the things that will bring me more client, like marketing, right?
So Go ahead. I'm sorry. Go ahead.
I would say the 2 biggest expense that you have in any business, right, is marketing. Marketing and payroll is like the 2 biggest expense. So I would say put yourself out there, don't be shy, and start marketing your organic soap so you can build some cash flow.
Yeah, because that's what I was about to say. Like a lot of times, if you have a tangible product, right? Yeah. I think sometimes we think that we have to have the product before we sell it.
Yeah.
You don't. You can sell it before you have the product, right? So again, especially living in digital age. I mean, again, if I had a soap business saying, "Hey, like my credit is horrible," or my funds are tight. Okay, well, I understand that. I would say number one, use social media. Right. Number one, your biggest thing that you can do if you have a tangible product like a soap business is to actually teach what you're doing for people. Right. So yeah. I would even have a tutorial of me making soap. What are the ingredients that it takes to make soap? Right. What is the process? I would explain the process, and that would be a part of my marketing. That would be a part of my Instagram, my Etsy. If I'm probably selling on Etsy, I'm doing a tutorial on how to make your own organic soap. And then a link in bio, if you want to order your soap from me that I make personally, hey, click the link in the bio. So now you get orders, you get paid up front. Now when you get the money, now you can go make the soap. Then once you make the soap, then you know what? You can go ship it off. So you don't need money. Again, that's what I say. You don't need money to make money a lot of times. You need an idea, especially now on the internet. You can show people if once you have a tangible product, okay, this is what I can do. Show them, boom, let them pay. You ship it off. You don't even, who cares about credit now? You don't need it. Who cares about, right? Your friend's pipe. It doesn't matter, right?
Yeah.
None of that matters, right? It just matters about what are you going to do to actually hustle and get
Yep.
out there.
Yep. You gotta put the grind in. And
Yep.
even with, listen, you could put an ebook together on how to create your own organic soap.
Yeah.
Listen, shoot, I want to know how to make my own
Or
organic
just
soap.
they can tell we can tell Chat GPT real quick to make us an ebook, right?
There you go. Listen, I
Right.
want to learn how to make my own organic soap, especially like with people that have skin issues. You know, you could do before and afters because people are very visual, right? Whenever you have a product, people like to see. People are very visual. So I would literally do a before and after. Listen, this is your skin before you use my soap. This is your skin after you use my soap. Smooth. I like the organic soap idea. Listen, I want to know how to make my own organic soap. So, Don, definitely hit me up after this. I want I like, and do you have a website? Do you have a website where people can actually order your soap? Or are you brick? Are you going to these markets? Like, I had to learn really quick. I had to be where people are at. If I have a product I need to sell or a service that I need to sell, I need to be where people are at. So I was in every whatever you call them events. So and passing out my business card. That's when business card was a thing. Now you don't need business cards, you just need to be on Instagram.
That's it.
Instagram is your business card. Okay, guys. So we did say, what did we say? We said, all right, you do need
You froze.
you need
Can
your
y'all still hear me
financial
in the
reports.
chat? No,
Yes.
I'll wait till she unfroze maybe.
Oh, I'm frozen.
Put in the chat if y'all can still hear me. Am I okay? Or am I frozen too?
You frozen.
I'm frozen?
Now you're not.
Oh, okay. You're not either. I was like, I mean, okay, cool. Go ahead.
So we talked about look at your financial picture, right? Start by considering what you can afford, given your current income, expense, and other debt obligation. Get a handle on how much money comes in your household each month. So it's so funny how your business finance and your personal finance need to be aligned.
Yeah.
They both need to be aligned. And where the money goes, make sure you consider your net income, what is available to you after taxes, not before, after. We can hear you. Okay, great. When we talk about the P&L, another important factor is I'll hear people say, oh, Abby, I want to buy a house. No problem. The bank was looking at my P&L. Well, sweetheart, you had a loss for the last 5 years. That's not, you want to make sure that you are creating a net income. Check your credit score and reports, because if you're looking for funding, banks will go looking into your credit score. Check your credit score. You want to also figure out your finances before any purchase or any inventory, like we said, and make sure that your business structure, that you respect your entity. Like, banks like to see a flow of things in your bank account. So they'll usually ask for your personal and your business. So what they don't like to see is like a big deposit. And they don't like to see like a tiny deposit. So you want to make sure that there is a flow. Okay. We can hear you, Chris, but you're frozen. You're a little bit frozen, but we can hear you.
I'm frozen now?
Yes, you are.
Oh, wow. What? I mean, you were frozen, I'm frozen. That's kind of weird. Maybe if I should, hold on, let me see if I shut off. What about now?
You're still frozen.
Come on. Vic, why you got me frozen?
I'm just looking like I did not make you frozen, but listen. But hopefully this was very helpful, guys. Next week we are going to dig longer into funding.
I do have a couple options. Hold on, let me see. I do have a couple things real quick. Let me see if I can share my screen.
Let's share screen.
Let's see.
Well, try to see if you can share screen. I mean, you're frozen, but check your screen.
Yeah, so these are okay. What about this one? Can y'all see my screen now?
Yeah, we can see your screen.
Okay, I probably have too much stuff up. Let me do this. So these are just some of the resources that kind of can help as you're kind of looking at business funding. And this is what I also use when I was really learning about this, because sometimes it's really good to go through the process. Go through the process when you're doing business funding, right?
Mhm.
So Lendio is one a good place to kind of start. They have really good concierge that can help you walk you through and go through the application, let you know what you can apply for, what you shouldn't apply for. There's no impact on your credit, but I thought it was a great exercise when I was using them to understand the credit and a loan process, right? What's available to me, right?
Mhm.
And remember, what we talked about last week as far as building your business credit, I think that's more important to focus on first before you just jump into loans, right? Because if your business profile and your personal credit profile is legitimate, then everything on this part that we're going to go through will also improve. Okay.
Right.
This next one, of course, we've heard of Blue Vine. A lot of people have heard of that. That's another really good place to start. Okay. They got a lot of banking relationships, but this other one here is, I thought, really good. This SBG funding.
Okay.
Okay. So, and this, it tells you right here all that you need to qualify, right? They want, on this one, they do want to see 250K in annual revenue, right? They do want to see 6 months you're in business, at least a 500 plus in FICO score, right? That's what they want to see sometimes, right? So it's so helpful.
It's not bad.
No, it's not bad. They have really good funding. I think almost like 85% or so get funding. They have with an 85% approval rate. They're really good with funding if you have some decent numbers, right? So SBG funding is a good one to kind of look at. Okay.
I think they're the required net, is that net or gross?
This is just gross revenue.
Yeah. Okay.
Yeah. Another one on here is I can't even pronounce it. Right.
Exenium?
Yeah, Exenium, I guess. Yeah. But they're also really good especially for digital technology, right? If you have a fintech app or anything like that, they're really good with financing as well.
Okay.
Okay. And what else I got on here? On Deck is also another good one.
Yeah, I've heard of On Deck.
Yeah. So they have a lot of good small business loan terms, line of credits. So these are just some of the ones that I've used in the past that I've researched. But again, the part that's so important, right? So lump sum, between 5 to 250K, maximum term limit. So theirs is really shorter limits, right? So this is for people that know that they can turn it around pretty quickly. This is not saying, hey, look, I want a loan for 10 years. Right. But this is something that's going to come out typically, daily or weekly payments that they have cash flow coming in. They got something predictable, but you may need that for operations. You may need that for payroll, those type things to where you can scale. But if you have additional helpers and work, that's going to bring money back into your pocket.
Yes.
All right. So these are some good ones. No hard credit pull, fast funding on this one. I'm trying to think. This is where. There's one of them actually told me here it is. Are we a match? Check your business long term. Boom. 1 year in business, 625 FICO, 100,000 in business annual revenue, business checking account, and you good, right? So again, a lot of these things aren't very difficult. It's just that again, there's levels to it, right? And once you're in business 1 or 2 years, you're making cash flow, and I feel for most businesses, it is not going to be too cash intensive in the beginning. Again, unless you're doing a big brick and mortar business, but more than likely, if you're doing a brick and mortar, you probably were doing something before you got to the brick and mortar, right? That's probably like a step up. So you should have some revenue before you kind of get started. And I always recommend people, not getting into debt as much as possible in the beginning of their business that you need to get started. So those are just a couple resources that I feel that are kind of real helpful.
Very good.
Am I still frozen?
You are still frozen.
Oh, wow.
But it's okay. We'll let it go. Let it go. We'll let it go.
My Jesus. All right.
Guys, those are some great resources, guys. So if some of you are looking for funding, Chris has provided you guys with at least 6 great resources that you guys can actually look into. I've used Blue Vine before. I like them. I like their services as well. So I say take advantage, review their requirements, and see what they're looking for. and then also communicate with either your financial advisor or communicate with your accountant that you are looking into those banks. You're not frozen anymore. You good?
Okay, I'm good to go. All right.
You're good to go. Do you guys have any questions for us in regards to funding, in regards to resources, and what is it that the banks are looking for as you walk in the door when it comes to getting money from them? I did look. We have no questions. Don't forget, if you do have any questions, guys, don't forget to send them to us. And we would be happy to answer them. We did have a couple of questions from last week, but we did also answer those questions. But let us know. Let us know about your businesses. Let us know, have you tried to get funding? Let us know what questions you also have about government contract, so we can make sure that Coach answers those questions for you next week. Do you have anything else for everyone else, Chris?
No, I'm just excited for next week for our guests to really talk about the contracting and funding, and that's going to really get some good nuggets on that. But I'm really looking forward to hear if anybody took the steps that we did last week that are working on it. Go ahead and put the email up there for us, Vic. Get some steps up there from last week that I did on the business credit funding, because those 7 steps that we gave, those are things that you can start now and do now to start to build and start the process.
Yeah. And let us know, if you have hiccups, or if you have any questions, with those steps. All right, guys. Don't forget, we are here for you guys. That is the whole goal of the Red Line. So any questions that you guys have in regards to taxation, your business structures, retirement, that's what we're here for. So don't hesitate to reach out to us at the help at the comeupseries.co and send us your questions, and we'll be happy to answer them for you guys.
Let's do it.
All right. Well, thank you, guys. Thank you again for showing up. I'm your tax strategist, Abby Joseph.
I'm your financial advisor, Christopher Bush.
You guys have a wonderful rest of your night. Thank you. Bye.
Bye-bye.